Good morning, Trade Pros. Sound check 1 2. Mikey, good morning. Dobrin, good morning, my brother, and everybody else. Welcome to our morning market update. Can I just get a quick sound check, and we'll get started in 1 second. Lord knows I need a sound check. So here we are. All right, I think we should be good to go. And here we are. Good morning, everyone. Welcome to Morning Market Update for Friday, January 16th of 2026. We got some fun stuff ahead for you today. A lot to talk about. I'm going to give you a quick little new tool as well that you could look at. You don't have to use it. It is a subscriber tool, but it's really, really strong stuff. We're going to get into that and more, and then I'm going to tell you some more stuff about more things. All right, morning market update. Let's kick it off. S&P is up this morning 0.3%. NASDAQ's up 0.5 percentage point. Tech strength continues. A lot of money piling into tech once again. I'll talk about that in a moment with you. Dollar index kind of flat. Oil is up 1%. Brent is up the same. Gold is down 0.1. Copper down 1.4% on Chinese crackdown of HFT trading. We're going to talk about that briefly today. Bitcoin down 0.2, Ethereum down 0.5% as well. By the way, if I cough in your face today, I'm really sorry. I'm trying not to. It's been like 3 weeks since I've been sick, and this cough is still lingering. It tends to do that sometimes. Doesn't help. I go and breathe ice cold air 5 times a week when I play hockey. But, I don't listen to advice. All right, 9:15, the economic calendar for today. 9:15, we have industrial production coming up here very shortly. That is for December. Then we also have at 9:30 we have expiry for S&P options. Today is actually OPEX option expiry, so we could see some volatility. More on that later. Top of the hour, 10 a.m. we have the U.S. NAHB Housing Market Index, or as I famously call it, NAHB. It just rolls off the tongue. 10:50 we have Feds Collins speaking. He's a 2028 voter. He's neutral, but he's set to speak. And then we also have at 10:50 Feds Jefferson speaking. All right, 11 a.m. we have Feds Bowman speaking. He's a voter currently and dovish, so you expect him to say dovish things. If he breaks character, which I highly doubt it, he might say some non-dovish things. Then it'll be a market mover. But if a dovish voter is saying dovish things, meaning lower rates, more market accommodation, it's probably going to go unimpactful for the market, okay? That's that. Then 11 a.m. we have Feds Jefferson again, who's a voter and dovish speaker to speak in the economic research conference, and that's at 3:30. All right. So Jefferson speaking twice, picking up those speaking fees on the circuit. Phase 1 of Trump-China tariffs. I had to mention this. There's more coming, according to the White House. 25% chip tariff announcement on phase 1. Said more is pending with negotiations with other countries and companies. This is a blanket 25% tariff until negotiation gets underway. Current tariffs 25% on NVIDIA's H200 chip and AMD MI325X. All right, exemptions are applied for U.S. tech supply companies. All right, he said Donald Trump said he could impose broader tariffs on semiconductor imports. That's interesting for Taiwan and for South Korea. All right, it's an escalation for sure, and it hits right at tech. It hits right at an industry that is the bread and butter and really the backbone of all market contexts here lately. But, it's something to watch for on the follow-through. The initial news, I don't think, is as much of a surprise. I think it comes now down to the negotiations and what ends up being a more permanent state of tariffs that are going to be imposed. All right, in other news, China cracks down on nothing other than HFT. So China's removing high-frequency trading servers from data centers, all right, because when you're in China, you have the ability to do that. Whatever you say goes, or else you get thrown in the back of the van and no one sees you again. 3 million LME copper is down 1.4%. And we went from all-time highs last week to now breaking down. So, this ban on HFT is in the metals complex. Is having an impact. I don't see the impact in the equity markets at all. All right, like we mentioned, today is OPEX. So what does that mean? Monthly equity index and cash settled currency options will be expiring throughout the day. Very important note on that is we also have MLK Day on Monday. Martin Luther King is going to be celebrated on Monday, and that means stock market is closed on Monday. And that also means that the futures are closed on Monday, and they reopen at 6 p.m. Eastern time Monday night, which is literally like their Tuesday morning or pre-market open into the next day, because futures are 24/5. All right, 23/5 actually. All right, what does that mean on Monday? Expect some low volume and liquidity on the futures that are open. Equity markets are closed, so I don't think it's even worth trading on Monday. So I'm not even doing a morning market update on Monday. I'll see you again on Tuesday. So this is the last one. We're going to skip a day and then be back to it on Tuesday. And it's important, because of this. Given the next week we have FOMC, all right, next Wednesday. Plus, we have a 3-day weekend and a 4-day shortened trading week next week. All right. Traders right now are incentivized to sell short-dated options to get some of that extra decay. And so in today's session, gamma, because it's OPEX, is so important. Now, a lot of people ask me, George, how do you get gamma? And I've shown one way to get call and put walls. All right. Meaning you just go and scrape the options activity. Look at open interest in SPX, look at where there's big volume of contracts, convert it to an ES level because there's a basis between the ES futures and the SPX index. Okay, so essentially convert it to ES, and then you have yourself some levels. Now these levels are call and put walls. They don't necessarily guarantee you there's going to be gamma around them, but there will be a lot of activity. The problem with those levels is they're often very far away from each other and from the market price. And you're looking at like 200 point, 100 point rally for sometimes the biggest levels. Then you got to go to the smaller ones. But there's also ways to get gamma. There's definitive ways to calculate it. But even gamma is an assumption of what dealers are short and long because you don't really know what their book is. But with technology these days, with algorithms and with AI, you're able to really pinpoint with some certainty what it's going to be. So here's some gamma levels. And you guys are going to ask, where do you get this from? And I love that you're curious. And I always share everything. I've never kept anything a secret except my secrets. This isn't one of them. Spot Gamma. Spot Gamma is a provider that gives you a lot of gamma information. They have a dashboard. They do options gamma, index gamma, single stock gamma, and they do a really great morning note, and they have a great analytical interface. I love it. Spot Gamma is awesome. Problem is you have to pay for it to subscribe. If you don't want to pay for it, don't. I'm here. I'll cover it for you every single morning. On that note, all right, overall index ETFs, we have a combined delta of 3.66 billion, all right, 3,660 million. That's in the 64th percentile of delta combined. So indices are modestly bullish in today's session to kick it off. All right, on the gamma front, we have 96 million positive gamma. That's in the 89th percentile, which is very, very high stabilization, which means if we have rallies, dealers are going to be inclined to sell. If we have drop-offs, dealers are going to be inclined to pick that up on the long side. What does all of that mean? Market wants to go higher. It's positioned to go higher, especially in tech. There's really big bullish bets in tech. But the stabilization factor for all these rallies, and the reason we kept failing yesterday, is this dealer gamma that's creating a real problem. Well, we're going to see some of that will get settled today with expiries. All right, but I think today's session it will be a little bit, look, we want to go higher, but there's going to be grind and chop to get there, and we already saw that yesterday. It's a prime example. I'm going to show you that in a moment. In terms of ES levels, where did they go? I just wrote them down. Oh, here are the levels to watch. 7038 has a really large gamma expiry there, and a really big call wall. They coincide together. Again, a lot of times they do coincide together. So 7038 is a key level. And then 6988, we have large gamma. Remember that level 6988 because that becomes our flip zone. So around these levels, the market is going to stick and tend to consolidate and just work around them before it escapes. They're like a magnet. Price goes up, it pulls you down. Price goes up, it pulls you up to those levels. All right, because of the gamma exposure. So just write those levels down: 70, 38, 69, 88 on the ES futures. All right. Today's OPEX probably won't be a big market shakeup, but we do still have to be on pins and needles for it. Let's turn around and set the trading plan and stop looking at my face. Although, you know what? You could probably still look at my face here. All right. Let me see some of the comments. We could hear you. Thank goodness, right, Mikey? How frustrating is it? Like, I don't understand why people who put themselves out on YouTube can't invest in technology, because I'm trolling. It's so weird to like move your mouth but not say anything. All right. Thank you, Mikey, for the read. William, thank you, brother. TTF, my brother, good morning. Don't give back the week on a Friday. Historically, Fridays are my worst days. Triangle trading floor, you, sir, are a real trader. Like, and I'm willing to bet you've been doing this a long time. Do you want to say yes or no to that? Because that right there is probably the biggest insight. Fridays, look, if we didn't have trading rooms and if we didn't have morning market updates and stuff, I'm going to be honest with you guys, don't tell anyone. I would prefer to not trade Friday. I would happily tell myself my entire, success hinges on 4 days. I'll be okay with it. You only have 4 days to do this a week. I'm fine. But Friday is kind of, some days are nice, but Fridays, for whatever reason, psychologically, obviously, the fact that we have 2 days off creeps in, and then it feels like a last chance to make good with your trading week if you've had a rough one. And if you've had a good one, it's a last chance to make it even gooder. So both of those aren't really good characteristics in trading psychology. Oh, buddy, first of all, I want to salute you for 4 years of full time. I'm sending you love, joy, and happiness, bro, and continue to do it. It's a beautiful thing. 4 years, right around the time where you're just comfortable. You've gone through all the waves and the phases. You're comfortable knowing you can continue to do this forever. You've settled into it. It's no longer exciting. It's still fun. It's not too fun. You know it's a job, and 4 years. It's a beautiful thing. Congrats, man, honestly. All right, let's get into it. But yeah, the reason I kind of gathered you've been around for a minute is Friday, that Friday thing. There are a lot of traders that I know that have done it professionally a long time are on the same bias. Fridays in August is basically their time off. They're like, I don't trade Fridays. I won't touch a thing in August. Just portfolio adjustments. How many trading days, Craig, would you trade? Well, everything minus the Friday. So typically for it minus holidays as well. I don't know. It works up to like 200 days or something. Maybe a little less. To be honest with you, it's a good question. I don't know. I don't have the statistic answer for you. Triangle Trading Floor, can I get your first name if you don't mind? You're here often. I'd love to say what up to you by your personal. You don't have to. It's the internet. I get it. All right, here's the story. We opened up yesterday at 7,008 half. So we opened up here. You can't really see it because my chart's beginning to look like a mess. I'm sorry, but these lines and stuff are still at clean levels. I haven't cleaned it up yet. I will do my weekly chart cleanse and clean it out in a moment, right? For next week. But we traded down to there for the 69.96 support. Now, pre-market, we had these green lines here where you see pink and green lines. These are buy and sell imbalances that I've left on the chart for further information. But we saw some pretty big imbalancing on the pre-market around 8:30 yesterday. That, to me, was a big support. And I used it as leverage to get into a long position. So I had some pretty good trades yesterday on the long side before things broke down. All right. So we go in, tag the 96 once. We try to expand. We get into the 710, 711 level. And I told people yesterday very clearly in the trading room, my next best trade is I want to see a break above that level. I need to see a little bit of an expansion, at least 4 to 5 point expansion. I want to see some buy imbalances. And then I have my trade. And I said, it's not too much to ask for. Turns out it was too much to ask for because it never really happened like that. We go in and every time we rallied, we failed. And we started to talk about in the trading room, like, look, this can't continue happening. Eventually, the bottom's going to fall out of the cup. We have too many people stuck long. We're going to have to push them off the ship so it could tilt back straight. It was like leaned over, too many buyers. So that happens. All right. The high was formed at 17 quarter. That's tagged there. And then we lost the bid, sold all the way down to where? 74 3/4. That's a 42.5 point drop in the afternoon. And as we head into the close, we poke our head a little bit off the lows. That rhymed. That was really cool. And the prior day cash close ended up being 69.85/4. All right. So what's the story overnight? Because all this blends into each other, and I hope. Calinvas, I got you, didn't I? Oh my gosh. I got someone. That's good. That's good. Did you go and check like the sound on your computer? Friday. It's Friday fun day, right? All day. All right, so after the cash close, we open up here on overnight session. Price dropped slightly to the 82 3/4. Not a big drop, like 2 points or so. Then we caught a bid and we rallied back into the range, right to the middle of it. No surprise there whatsoever. That's where the liquidity's at. And then we formed the overnight high at 7,007 on that run up. I'm going to teach you something really quick. I'm so sorry. I got a cough. I don't know how to mute the mic. Ooh. I'm going to teach you something really quick. When you look at a range, okay, many people mark the support and resistance of a range where? Okay, people will say this is resistance. Oh my God, I wish I had my pen tool. This is resistance, all right, and this is support. Let me just put an S down there, right? And it's good. Yes, you're 100% right. That is resistance, that is support. The one that people don't draw that's probably more important than those two is this one. Right dead smack in the middle. Why is this the big one? Well, because the top end is the extreme of the buying. The bottom end is the extreme of the selling. And if we're in a range where most people have positions and the most volume often is in the range is in the middle. And you have, that's what volume profile is based on. You have the little belly, the distribution, right? So middles of ranges are always so key. Don't ignore them. They work very powerfully for retests. Not while we're in the range. We'll usually comb and whack right through the middle without any regard for it. But if you've broken above and you're coming down, don't expect it to get all the way to support. All right? It's not going to get there if we're going to stay to the upside. In fact, if it does get there, that kind of erases a lot of strength. It shouldn't get there. Right? So when it's a broken range on a retest, mark the middle of it. It's so key. We saw that happen here tonight. I thought in overnight session, I thought I would make that a case in point. Make a lesson out of it. I don't know. If you liked it, great. If you didn't, I don't know what to tell you. Maybe I'll give you more that you will like. Hang tight. All right. So here's the trading plan for today. Today's OPEX for January. I probably said it 1,000 times. Dub it in. That's perfect. Auction market theory is beautiful. I love it. I use it too. It's the basis of some of my levels, but then the execution aspect of auction market theory is where you need to have like a 10, 15, 20 point stop because there's wiggle room. That's where the order flow gets you that crystal clarity zoomed in. Auction market theory is so key, and then volume profile is one of it, but auction market theory is also the biggest part that's kind of misunderstood is that it's also reading the real-time auction and not just getting levels, but also being able to identify the strength in the bid, the offer, how they interact with each other, and then how that creates opportunities. But I'm really happy to hear that, though. But in number one, that you're profitable. Number two, that you found a tool that works for you, okay? I love that for you, brother, and for all of us. So trading plan today, let's get to it. Trading plan is this. I don't know if I said this yet, but today is OPEX for January. Okay, monthly equity index and cash settled currency options expire. That's what that means. We could see less clean price movement, more cluttered, choppy, range-bound, Friday-like crappy trade. Okay, first of all, that's the expectation. Anything above and beyond that is a gift in January from Santa for us. But that's the expectation. Expect things today to be choppier, less clean. Something will look perfect. It will break by 2 points, get you in, then stop you out, then go back up, then come back down. Just expect that. All right, levels and order flow will still work. more noise will be in the market. Definitely more noise. Flip zone for me today is 69.88. I said remember that because that also ended up being, let me look at my notes. What was the level? I think 69.88 was a really big, 69.88 had really large gamma. Gamma is a magnet. Flip zone is there based on PA, price action, and then also based on gamma. So it makes it a really strong flip zone. The good news is we're close in price to the flip zone, which means we'll have some trades early on in the day. That's what it sets up for. All right, looking for early order flow. Today's indication for me is going to be on the flow side. Looking at where do we come in? Is a strong bid, strong offer? Is it getting reloaded? Where's the MBO, market by order activity, shaping up to be? Currently, MBO, if you want to know that, market by order, we got 100 lots sitting at 70.10. And blah, 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 blah. And we don't have much more than that, like large spec positions, but we got to hang tight. Market hasn't opened yet. When it opens, we'll see it. But it looks early on like the liquidity is to the upside, and the market goes to and through liquidity. So I'm looking for early order flow signals for the lead. Anything above 88, I'm looking to be a buyer into weakness. Anything below 88, I'm looking to be a seller of strength. All right. Not going for home runs today. Looking for base hits and risk-adjusted P, risk-adjusted profit. Yesterday, 1.296 million traded, lower than the day before, which was the high of the year. And so where volumes are contracting going into the weekend today, depending on how OPEX goes, I'd expect it to be a decent volume day. Right now, it's not. It's horrible. 135,000 contracts on the ES is disgusting. That's very low. So you're very early. Many people ask me, how do you know days are going to range before they range? Because I'm pretty good at knowing that. Look at volume. Right? People are already telling you they don't want to trade. 135,000 is very low. You might as well just close the market, settle at 98 even, and we all go home for the weekend. Calendar says, I'm watching on TV. When I don't hear sound, I freeze. Oh my gosh. Calendar, you got me twice on the cough. Microphones has his own life for sure, man. I wonder how this looks on TV. Is it good quality? Dub it in, yes, I do watch SPX and SPY, but more for gamma levels and then convert them to ES in real time, like gamma shaping throughout the day, which is part of my order flow analysis tool kit. Volume, dub it in, is, do you use Sierra charts? If you do, you see it right up here. All right, that's for the current session. Yesterday's, it's already done, right? That one is, I'll show you where from. This might blow your mind. Don't tell anyone this is where I'm getting it from. But just CME group. Type in CME ES volume. Bam, first link. You wait a little bit. It's apparently my internet. Sometimes CME doesn't work. Am I on VPN? No, I'm not on VPN. Okay, let me back out of it. There you go. And then it loads and it looks something like this. And then you just see the volume. See, yesterday was the highest day of the year. And then you're kind of... It's interesting because it ramped up into yesterday and then dropped off again. So, yeah, that's where we're at. Great question. Let me hide that again, and then I'm getting ready to end the broadcast. Unless you guys have any questions, that's the plan. All right, crystal clear plan, right? 88 flip zone, long above on weakness, short below on strength. Off that 88 big gamma level, expect chop in turbulent conditions. From where you get the info with the volume. Yeah, absolutely, Matthias. That's what I use. I use SPX, I use NDX as well, and then they get converted to ES levels. They don't, like, ES options are very specific instruments. They're not as heavily traded as the SPX. So I'll look at SPX. The way I did it for call and put walls, I pull up the SPX option chains. I do 0 DTE expiry because I don't want too much option expiry. I don't care 2 to 3 days from now what options you have because you're not really feeling the pinch until they come up for expiry. So I use 0 DTE and then would calculate based on that the call and put walls based on open interest, not volume. And then that would give me good levels. But I took it a step further and combined it with some data from Spot Gamma, which is an incredible website. I'm going to actually tap them on the shoulder to see if we get some partnership stuff going. But yeah, that's what I got. Love you guys. We're about to open in 5 minutes. I got to get in the trading room. And I will see you. I'll see you there. If you want to check us out, TradeProAcademy.com. Friendly reminder, Monday we're off. I'll see you in action Tuesday morning again. Take care and goodbye. Be good, be well, get paid, and go enjoy your weekend. Ciao.